AAA just came out with a study where car insurance rates are expected to increase 2025, probably going into 2026, an additional 15%. Now, calm down before you hate on this channel and just kick me in the and just comment below. You can, I don't mind. I don't think that's real. I don't think that the numbers, I think honestly what they're probably projecting is their numbers are likely going up. There are some companies that are going up in price, but I think in general, insurance has leveled off to a level. Here's what you're going to see going into 2026 and beyond. Actually, let's look back at how this is happening. This is really just a 5-year rollout. In the last 3 years, we've seen a 30 to 40 to 50% increase over the last 3 years. So we've seen 12 to 15 to 20% every year just increasing to where honestly it feels like insurance is just ridiculous. It's really expensive. I'm paying $1,000 more than I think I should, and all of those things are happening. I'm in the same boat as you. I pay insurance and don't want to, but it's part of having myself protected correctly is the more important piece. Those 3 years in the last months have been increasing. Now, the beauty of AAA is I actually give them credit because they didn't increase as much as everybody else, which is why I think they're going to have a larger increase. But what's happened is most of these companies tried to stay strong and not have these major increases because they know when the increases happen, then you start shopping. Why is everybody shopping? Why are the increases happening? I got a whole video I can share with you, but essentially we forgot how to drive. When we got out of the pandemic, everyone started to learn how to drive again. They weren't driving as much. We bought newer cars. The cost of repairs were more expensive. Just a whole slew of things have happened that have caused those rates to go to where they're at now. Medical payments are higher. Going to the hospital costs more. Buying bananas even just to take care of somebody if you're locked out of your rental, things like that. So those things have created this spiral of increases. And it's honestly just been a fight. People are shopping more now than they ever have because of those scenarios. The thing that people don't realize is they can get a better deal. I can save $1,000 if I switch to a different company. There are options out there. Again, you got to be careful what you're going to because not every company is the same. The coverage that you get could be different, and that's part of why people are seeing these decreases in prices because they're really just choosing different coverage. If you are shopping for insurance, I'll put a link in the description below where you can work with what I call an independent agent. They shop multiple companies. They can take that profile that we just talked about, find the best fit for you to get you that best rate. Now with that, what people have done is the shopping that you've had has increased, yes, but the rates have climbed up with most companies. But remember, we said some companies are trying to stay strong. Companies like State Farm, you're seeing their increases start to hit all of a sudden because they can't handle or stabilize those rates anymore. And now that huge wildfires have broken out, hurricanes are coming in more disastrous, and we're having a lot of larger issues, I guess you could say. These companies are starting to feel the hurt to where they have to increase the rates, and they're coming in hot and heavy. The other ones that have already raised them are already starting to see decreases because they've already collected the money ahead of time. For example, Company A, the last 3 years might have gone up 50%, but now Company B is starting to creep up and they're starting to creep down to where they're leveling off. That means that Company A that has already done those increases now is the competitive company as Company B starts to increase those rates. The reason being is because everyone thought that Company B was the best, but they didn't shop because why would I? I've got the best rate. I see your rates are going up 20%. Ha 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 ha. Boo boo, right? So the thing is, they were probably cheaper in the first place because they might have been a better fit for the client. And if that's the case, then Company B is now causing you to shop, which is causing people to realize, wait a minute, I've been overpaying this whole time because I wasn't with the right fit company. Now that AI is starting to hit the market, all these technologies are starting to come out, everyone's trying to like say the information to give the data to customers, they're realizing that shopping half the time is really the answer. Now that isn't always true because I personally believe that when you find a company, you like the agent, they have a good rate, even if they go up 20%, that's why I'm paying a little bit more than I should, is because of the packages, the deals, the things that I've got that I want covered. That is something that some companies can't necessarily do. So be careful when you are talking to agents and you're shopping around that you get someone that you can trust that can take that data and try to get you the better fit without losing the coverages that you're looking for. So in this article from News 12, I don't agree with a lot of it, but some of it is pretty true. The accidents have been more prone in the last several years. AAA is noticing, because they do data research, and they have seen a lot more claims over the last 3 to 5 years. That is one of the reasons that you're seeing these increases coming in heavy. And they are noticing that there are increases in most companies, but they're nothing like they were before. They're 8 to 12%. As long as you're within that range, I think you're going to be in the normal bucket. But again, you're seeing companies go down 2 to 5%. So there's those leveling off that we're seeing as these companies start to make more income. Now, there is a way that you can fight back at this. There's a lot of things on your current policy. You don't necessarily have to switch insurance to get the best deal. It's really working with the agent. Trust them, then go to them, find out if there's any additional discounts, if there's any telematics that you can start doing where they watch your driving. They give you 90 days of data. Here's my information, watch me drive, watch me brake, watch me accelerate. I am a good driver, great, give me 20% off, 30% off, yes, some are even 40% off with the right companies. And then do your research, find out if you are with the right company. Does Nationwide do well with my scenario? Does Safeco do better with my scenario? Does Allstate really like my location, my area, because it's a better fit? Or do I have to go to a Progressive, who is a really good company, depending who you talk to, right? There's different loves and hates. Honestly, I think it's the agent more than it is the company, just finding the right coverages, the right fits. Some companies don't like gray areas, some do. So finding those fits that are good for you, but also what discounts am I missing? Do I have my alumni discount because I am an alumni at a college? Or do I have a credit union member discount? Do I have those extra pieces that I should be carrying that I should automatically get? Do I have the longevity discount? If you've been with a company for 3 years or more, or 5 years or more, which is even better, a lot of these companies will give you discounts because you're now a profile fit that's better for them. The closer you get to 50, that is the sweet spot for car insurance. If they want the best, they want the best of the best, and that's the lowest risk for insurance. Likely have a house. Can I combine those things? There's so many options that you have that can help you save on your insurance. So facts are true, kind of debunking. It's not going to likely see a 15%. If you are, might be time to look. I'll put that link in the description below. But if you are seeing a 6 to 7, maybe an 8% increase, that's normal. I would expect that to happen. As everything levels off, you should see about a 2 to 3% increase across the board. That's pretty much every year. Not always, but in most cases, because it's inflation. It's just the cost of business. Materials of your house cost more. Cost to repair the car costs more. The parts don't get older, or the mechanical labor doesn't get less the older the car is. So there are different things that you've got to be aware of. If you are aware of these and you're trying to get a better deal, I've got a discount video that'll go further in depth. If you're not quite familiar with the coverages you should be carrying, we just made a Car Insurance 101 that will help you understand the coverages that you should be carrying. I'm Mark with Think Insurance. I'll see you in the next one.